Hi, Virginia. Thank you for joining our program today.
Thank you for having me.
I know you use 5 different themes to analyze the market. Can you tell our audience what these 5 themes are?
Yes, the major 3 themes, and those are themes that are important to shape the investment world over the next 5 and more years, are climate change, demographics, and supercycle. And supercycle is really the role of emerging market economies, which is growing very rapidly, onto the global economy.
And so can you use an example for me, like for China? How can you use China's economic growth in your theory?
Well, China has had a big impact onto the world in many different ways. Provider of capital through the buying of US Treasury, provider of exports, so global competitiveness, provider of production facility, and clearly provider of demand, particularly as China is shifting from an export-orientated model to a domestic demand model. Now clearly China also fits within all the themes that I've mentioned. Demographically, although China has a very large population, its population starts aging quite soon after 2020, and therefore has a big challenge in that area. From a climate change standpoint, which remains a very important issue for the entire world, i.e. how do we use our resources better? China, as you know, is going to be one of the leading emitting in terms of carbon dioxide country in the world, sometimes over the next 12 to 18 months. And then finally, clearly China is at the core of supercycle, or one of the leading emerging market economies.
So under this situation, what's the impact to the stock market?
Well, the impact, if we look at where we are in the crisis currently, the way we've played China in that regard is clearly China never got involved in the toxic element of the crisis, the financial crisis. So from a defensive standpoint, although most people would have looked at China as being an emerging economy as a much more volatile or dangerous place to be, actually in this crisis it's proven to be resilient. And as you know, the stock market has done quite well from November, December in particular. Now, within the supply and demand position, clearly China has also been very interesting from its role in supporting the global economy. And there, I think, if one stimulus package has been successful so far in terms of both design and implementation, I think the Chinese package is one of them.
Do you think the worst is over?
I think we probably have touched the lows, but I'm not sure it's going to be a V-shaped recovery. I think although we've made a lot of progress, we've been in this crisis for 18 months, and a lot of bad news are behind us, I see it as a rising W with many legs, i.e. a lot of volatility, a rising trend, but we have to be aware that the situation among financials, the toxic asset situation, is not all solved. We have to be very careful. All this said, it's the kind of environment where if you set up your growth parameters, we're stock pickers. We want growth companies selling at a reasonable valuation with strong balance sheet, quality management, and sustainable competitive advantage. This is when the long-term themes come in, understanding the long-term growth. Then during that volatility of the rising W, if you want, with many legs, you will have a big buying opportunity, and you have to take advantage of it, because on a 3-year basis, this is a strong buying opportunity.
Well, thank you very much for your advice.
Thank you very much for having me.
Thank you.